We have a pro trader standing by with more on the market action. Alan Knuckman, the chief market strategist at St. Paul Research, is here. Alan, what can you tell us as investors wait for the market to bottom out?
Hello, Angie. 8 sessions of bouncing off this bottom in the S&P between 3,700 and 3,900. The question now, is the bear going to maul the market or hibernate for the summer with a rally run?
Alan, you are always in the hunt for beaten down stocks that could bounce back, and you use call options to capture that move. What's your trade trigger?
All right, it's all about the macro market. Let's talk about today's trade trigger. Looking at Affirm, AFRM. Now, this is 80% off its December top, but it was a $30 stock just a month ago. So we've been trading between 15 and 30 now for 2 months. The midpoint here is about 22.5, is a key pivot just up above. A move above that would send it back to that 30 top range for now. So the play I'm looking at here is the AFRM's, the September 1750 call, trading about 6 or so with the stock at 20. So what I'm looking at, we see some smart money sees something here down here at this bottom base. We've seen bullish divergence where it made new lows but not new highs in implied volatility. So a lot of positives getting set up for a big buying bounce in this stock that's been bad enough to buy. So this option right now, the September play, is in the money with a high delta of about 70%, meaning it's going to act like the stock, limited risk, and 3 months of time, with this option doubling if we get back to that $30 range, that $30 top that we were at just a month ago.
What are your trading day takeaways?
All right, let's talk trading takeaways. Fast fall. So it was only 2 weeks ago that the S&P was fighting that 4,200 level in the S&P, seeing if it could break out and get to that midpoint of that drop from the top. Now, this disappointment dive has caught this market, and it's gone straight down in just a few fast sessions. It was 10% higher. Number 2, snap back to fill the gap. Now, that's a question. Gaps are above at 3,900 and 4,000 to get filled. The question is when. And number 3, blow off TNX top. The TNX, which is the 10-year yield that everybody gauges their mortgages off of and is the barometer for interest rates, that peaked at 3.5% just about a week ago. Now, it's sold off more than 10% in that week, and we're about 3.1 or so. Now, let's put that in perspective. That was the peak in 2014, also the peak in 2018, and before that, from 1980 to 2011, the market was always above that 3% threshold. So rates are still extremely low.
You are correct, and likely the only person calling rates low, but it's true. Thank you so much, Alan.
Thank you.
Go to businessfirstam.com for where to see our show on TV.